Hello people. I just want to share a strategy with you. So basically, this is a strategy that will help you to trade. So the strategy is based on moving averages. So you'll be using an indicator to be specific. All right. So we're going to be using an indicator, which is a moving average. All right. So what is a moving average? Let's insert this indicator and see. All right, so this is a moving average indicator. So simply go to insert and then go to indicators, then let's click moving average. So here you have a period. So this period is like the time, or let's say I wanna take an average of say 20 candles. All right, so this period will be my 20 candles. Okay, so here it says apply to, I will apply to close. If I apply to close, that means I am taking an average of candle closes, right? So here I'll be taking an average of candle opens. So here of candle highs, candle lows, blah 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 blah. Right? So here you set your style. Basically it's the color. All right, so here you have the size. All right, so see the size or thickness of your moving average. Right, so this is how we're going to do this. We'll have a PDF, and that PDF has a strategy. So go through that PDF and then we'll come to the chart. Okay, so let's first see this PDF I'm talking about. So this is my PDF, moving average price channel strategy. So we're gonna go through this. All right, and then we come here and go to a chart. So let's begin. This strategy is contrived of 3 moving averages. Okay, so have a 5 SMA of the close. So what is an SMA? SMA is simply an abbreviation for simple moving average. All right, so we take a 5 period simple moving average of what? Of the close. Okay, and then have a 20 simple moving average of the high, and have a 20 simple moving average of the low. Take note of that. It's supposed to be an O, sorry. All right, so these simple moving averages, this simple moving averages helps a trader to identify the trend. So the 5 SMA will then signal a buy or a sell, right? So this means that we'll be looking at the 20 SMA of the high and the 20 SMA of the close, and then we'll have a 5 SMA which will then give us a signal. Let's come and see this one chart. All right, so for me I have this so these are the templates that I've made for my my indicators. All right, so let's come here. So okay, I told you how to insert this. If I were to insert one of these, okay, so go to insert indicators, then I go to trend, moving average. All right, so here I'll say period. Let's say I want to insert the 5 SMA. Okay, so this will be 5 method will be a symbol. All right, and they are applied to a close for SMA of the close or high, whatever it is, and then I click OK. You see, actually let me just insert this so that you can see how I do it. All right, so let's open this chart. As you can see, there's no indicator, so let me remove the grid first. You can say Control G to remove your grid, right? So here I'm going to insert indicator, trend, moving average. Okay, let's start with 20 SMAs. So I'll click 20. All right, and then I go to symbol, then we issues of the close, then show the size. All right, then the color is white, it's fine. Then click OK. So this is our simple moving average of the close. All right, so let's go for a 20 SMA of the open. Okay, indicator, trend, moving average, 20 period. Okay, so this one will be an open. Okay, sorry, I don't know how it should be. I assume this one is wrong. Right, so let's just check here. So we have 5 SMA of the close, 20 SMA of the high, was high in the low. Right, so let's come here to our chart. All right, so I'm going to insert indicator, trend, moving average. So this one, let's start with the low. All right, so this one is for the low. All right, and let's insert the one for the high, the one for the high. So there it is. This one's for the low, and this one for the high, and then let's insert our 5 SMA of the close. Right, so go to moving average, period, set it to 5. Okay, then method is simple, and then this one say close. All right, oh okay, let's change the color of this one, say maybe red or whatever color prefer. Okay, I'll go for blue. Okay, so yeah, there it is. All right, so now that I've inserted this, let's go draw a strategy again and see. Okay, so before you trade a certain strategy, you have to know the end rules for that strategy. Okay, so you have to know when you buy and also when you sell. Okay, so here you have end rules for short position. So what is a short position? A short position is simply a sell. Okay, so if I'm selling a certain currency pair, that means I've entered a short position on that currency pair. All right, or I've shorted that currency pair. Okay, so the long position will be a buy, right? So entry rules for a short position, which is a sell, both 20 SMA must be sloping down. All right, meaning I look at the 20 SMAs. The 20 SMAs have to slope down. Okay, let's draw. Let me draw this for now. Come on, come on, come on, come on. Right, sorry. So this will be our 20 SMA. Okay, come on. Okay, so these are our SMAs. So both of them must be sloping down. Okay, and sell when 5 SMA crosses the 20 SMA of the blue. Okay, let's say so from here they are sloping down. Okay, and then this one is a low, and then this one is the high. All right, so You want to sell when the 5 SMA crosses below this moving average. All right, so let's say here this is our price. Okay, all right, so we have our price here, and then it's trending down. All right, so let me set another color for the 5 SMA. It's a yellow, right? Super. So this is our 5 SMA. It should cross down. All right, so at this point we enter our position when the 5 SMA crosses below the 20 SMA of the low. Right, so this is how I control the strategy. It has a risk management on it. Right, so it says stop loss above 20 SMA of the high. All right, so what is a stop loss? A stop loss is something that we put to protect ourselves from losing too much. All right, let's say I am selling here. All right, so as I place my stop loss here. All right, so if price fails to go down and goes up, I stopped from this price. Right, so this will be our price here. So I've stopped at this price. All right, so the target is 2R or 1R, where R is the amount you are willing to risk. All right, so the amount I'm willing to risk is measured in pips. All right, let's say from here to here. First of all, you need to know what's a pip. Okay, so I'll do another video. Actually, you should consider purchasing our course for more information where I deeply explain things. So this will be our risk. All right, this is how much I'm willing to risk. All right, it can be either a certain amount of money or pips, whatever it is, but then we call it our risk. So if I'm risking this much, I want to make 2 times this. Okay, that's where my profit target will be. My target will be 2 times this R. So 2 times this will be like let's say that. Right, so this is 2 times R. Okay, so I sell here. This is my entry. I enter here, I sell, and then price goes down, and then when it hits this profit target, I'll be closing my trades. Actually, my trades will be automatically closed. Okay, so let's see this on a chart. Okay, so here we have our chart. What are the entry rules for short position? I want to see the 5 SMA crossing below the 20 SMA of the low. Right, so let's say I was all right, this is where the market is. All right, so it's here. What I do is that I look for the cross below this SMA of the low. Now I see that this SMA has crossed below this 20 SMA. All right, so I wanna sell here this point. I place a sell there. All right, and then I see what happens. I'm pressing okay. Let's say I sell at this point. Okay, no here. All right, so I sell here because I see that my my 5 SMA has crossed below this 20 SMA. Right, so I sell here, and then let's say my stop loss at this price 5996. Okay, and then I'm taking my profit 2 times this. All right, which would be somewhere else, say somewhere here. All right, Actually, this one is to run. Say here. All right. So let's see what happens after I've placed my order. Okay. Now price goes down, goes down, goes down. Here's my profit target, and then I add my profit. So let's see how much is that in pips. It's 5, 8, 6, 9 minus my entry. Okay, so I'm saying this minus this 5, 9, 5, 1. So that's an 82 pip profit. All right. Whereas I was risking 5, 9, 5, 1 minus 5, 9, 9, 6. So I'm saying this one minus this one, and then you see so I was getting a 45. All right. So 45.80. It's not exactly 2 times this profit target, but it's close to it. So I'm risking 40 pips to make 80 pips, so it's good. All right. Now I see that I've placed my entry here, and then price went down, and then here I've took my profits. Done. That's how you enter a sell position. Let's look at an example. All right, let's remove this. Okay, so here we see again that okay, let's start here. We see again that price actually, or not the price, then our 5 SMA is below this 20 SMA. I mean the 5 SMA is below this 20 SMA. All right, and then we enter our sell here, and then and take our profit somewhere else 2 times our risk. Okay, or we hold and take profits here. All right, so let's look at that example, and here's another entry. All right, here's another entry. It's quite simple, guys. Just follow this 5 SMA, you sell here. Okay, so go to order, you see, and then you sell your things, done. All right, so let's continue with our strategy. Now we'll go for entry rules for a long position. Okay, so a long position is where I'm buying. All right, so here I look at the slope of the SMAs. All right, that's our first step. Slope of our SMAs. All right, let's say this is our price, just going up, down. All right, so there's our 20 SMAs, 20 SMAs. All right, and then I have this 5 SMA. Okay, so I want to sell when it crosses above. Also, I want to sell at not at this point, say right at this point. So when I saw that my 5 SMA has crossed above, okay, so this one is for the high, and then this one is the low. These are 20 SMAs, 20 SMA the high, 20 SMA the low, and then this is our 5 SMA, okay, of the close. Okay, so this one's 20 SMA of the low, 20 SMA of the high, then this is our price. All right, so let me also say price or market. So here I want to buy when the 5 SMA crosses above the 20 SMA of the high. All right, so it crossed above, and then I buy. All right, same here, my R, my stop loss bit below. Okay, so this is my SL right here, my stop loss, right, and then this is my take profit here. which would be 2 times this or 3 times this, whatever risk to reward ratio I'm using. So I prefer using the 2R, right, rather than using a 3R or a 4R or 5R, whatever it is. I prefer using 2R, right? So this is our R, this is amount we're willing to risk here, and there's our take profit. So okay guys, let's go and see this on a chart. All right, as you can see, okay, let's first look for the slope. Okay, I see that both of these joint SMAs are sloping up. Okay, that's our first thing I will look at, sloping up, right? Secondly, the cross. So the SMA is crossed above the SMA of the high, and then I'll enter our buy, say here, I buy this point, okay? And then my profit target is 2 times my risk, and my risk is here, my stop loss is here, okay? This is the amount I'm risking, right? And then my profit target will be 2 times my risk, which is somewhere else there, right? As you can see, I've made a great profit from this. I bought here, and then TP was hit there, right? That's what should have happened if I were to play this trade, right? Same applies here. It's our buy signal, right? Buy signal, another buy signal, another buy signal, sell signal. So for a short position, you look at the slope. Okay, these ones are sloping down, and then you want to see this one crossing below both of these, which is here, and then you sell. All right. So here they're sloping up, looking for buy opportunities. If they're sloping down, looking for selling opportunities. Sloping down, I look for sell entry or sell signal. Sloping down, sell signal. Sloping up, buy signal. Yeah, it's quite simple, guys. You just follow these SMAs. If they're sloping up, you want to see this one crossing above this one, and then you buy. If you're on a short position, you want to see this sloping down, and then this one below this, and then you do what? Sell. Simple, guys. Okay. Most of this video is going to be very long. All right. Done with this. So trading environment. So a trading environment is where, or I want to know what the price is moving, or which stage of the market are we at. All right, are we on a downtrend, an uptrend, or a consolidation? All right. So an uptrend is where price will be making higher highs. All right. So this is my low, low, low. Okay, and that's my high there, another high there. Okay, so if the price is making higher highs and higher lows, which is this high will be higher than this high, and then this low will be higher than this low. All right, so that's an uptrend. A downtrend, it's where price now it's doing the opposite of this, is making lower lows. All right, so this low will be lower than this low, and this low will be lower than this low. All right, and then higher highs, this high will be lower than this high, and so on. So this is downtrend, and this one is an uptrend. All right, so a consolidation. So a consolidation is simply a sideways trend. All right, so price will be making same highs and same lows, same highs, same lows, same highs, same lows. So these are our lows here, and then these are our highs. Right, so this is our consolidation. Here I say that it's poor. All right, it's poor. Uptrend, it was perfectly. Downtrend, perfectly. So what I'm referring to, it's the strategy here. So I'm saying that this strategy works well on uptrend, and works well on a downtrend, but it's poor on a consolidation. All right. So how do you know the environment you are in? Okay. Don't worry about this one. So this one, it's simply this is how I spot an uptrend or downtrend using price action. Okay. So I'm going to show you how you spot an uptrend using this strategy. All right. So to spot an uptrend, you want to see the 20 SMA sloping up. All right. Both of the 20 SMAs will be sloping up. All right. Both SMAs sloping up. And then you want to see the 5 SMA trending above the 20 SMAs. All right. So it will cross and then it will trend above this. You see. So let's come here and spot an uptrend. So here is a downtrend. Okay. You can see that these ones are sloping down, sloping down, sloping down. Okay, and then this 5 SMA is trending below this. Most of the time is below, most of the time is below, right? So this is a high, a high, a high, a low, a low, a low. So by past action, you can see that the graph is making lower lows and lower highs. So I'm on a downtrend, right? And then let's say that's how it is, right? The cross section, something like that. So this is a high, a high, a high, a high. And then this marks my lows. This is my low, my low, my low. So to spot an uptrend, a downtrend, I mean, using this one is a downtrend, sorry. So you want to see that these ones most of the time are above, okay, in a sloping down. Above the price, sloping down, and then this one, it's actually trending below these SMAs most of the time. All right, so for an uptrend like this one, slope up, slope up. All right, so if you have watched my previous videos, you know that I said that price is an impulsive wave, a corrective wave, impulsive wave, corrective wave, impulsive wave. Okay, so this one, this one's actually sloping up. So this is my impulsive wave, and then this one is trending above. Okay, so I buy here, take profits, whatever my target is. Okay, so okay, let me show you the last part of the strategy. 5 SMA. Sorry. Come on, okay. Come on. Alright, so on a range, say 5 SMA will be trending inside the 20 SMAs, okay? So these will be my SMAs, 20 SMAs, 20 SMAs. This is 20 SMA of the high, then this is 20 SMA the low. So the 5 SMA will be trending inside this, alright? Like that. So I see that the price now, showing the market now is on the consolidation phase, right? So it's making same highs and same lows. All right. Let's take an example of a ranging market. This one, okay, just this phase. Okay, so when I look here, so here the price is actually consolidating. As you can see that this SMAs, the 5 SMA is trending inside this, right? Here it's another example of it here, ranging market. Okay, so here from this one, from this vertical line here to this vertical line here, because that the price was consolidating. How you just spotted that? Simple. Just look at your 20 SMEs, right? And then look at the 5 SMA. You want to see it trending inside this, all right? So here it's inside, going up again, inside before it shoots up, all right? So you don't trade this one. It's not tradable. It's stock market, can say. So I don't usually trade the shopping market, and just like this one, I don't trade it. Also this one. Yeah, so guys, what you can do is that you can go and check out the strategy and test it on a demo account and see how it works for you. So this strategy is actually perfect for how do I say, day trading, not swing, and also not scalping, right? So because it actually gives false signals when the when it's when we're scalping, right? So let's okay, let's try to use it on a 15-minute time frame. It's perfect. About 1 hour, but not on the 5, 4, 3, all those. Yeah, so this position is a sell position. I'm going to do the sold here. Yeah, that's it, guys, from profxtwins. Hope you enjoyed this video. If you did, click the like button, subscribe, and also share the channel. Yeah, by the way, guys, we offer a trading course, right? So that's where we actually show you more advanced strategies. Yeah, all right. So yeah, strategies like this one, which is trading the market using moving averages. Yeah, that's it, guys. Hope you enjoyed the video.